Hope everyone is doing well. This is going to be a video over May the 2nd. Overall, just fascinating time. So the market, let's see one thing real quick before I talk. Yeah. So the market closed as a bull bar, and on the daily chart, it got down pretty close to a 20%. So let me check the math here. So the high was 47.99, so we'll just call it 47.80. The low was 38.55. It's a 19.3% correction, so not quite 20%, but there's always gonna be value investors buying at 15%, 10% down, 15% down, 20% down, closing below the March gap on the monthly charts of 2021. So makes it a little easier to see. There's a gap right here. We closed below it during here. And one thing I've talked about a few times, and at this point, we touched the moving average. And if you look all the way back to 2008 and ignore the current bar, the market went a little below it here, below it here, below it here, far below it, far below it. So the odds were the month, if you look back on a daily chart, just to give you perspective, the market, I believe it tested the moving average here and then rallied for a few days. But the problem the market had was that was a very small break of the moving average when it's gone below it by several points, several times, here, even here. And it's late in the move. So the odds are you were going to get a deeper pullback, something like this. I mean, possibly like that, but probably not. So going back to the daily chart, bulls, the E-mini is probably going to bounce. You can call it a possible bear channel, bear breakout. Doesn't really matter, however you want to look at it. More importantly is, let me just get rid of these lines for a second. It's a micro channel, mini bear bars, 3 big bear bars here, but overlapping bull bar. The odds are the market's going to have to bounce, just like it did over here. And then the market will decide if we need to go lower. It's possible you could call this a parabolic wedge bottom. 1, 2, 3. And it's kind of nested. 1, 2, 3. 1, 2. Or 1, 2, 3. Bear breakout. So we could easily rally pretty quick back to these lows. But ultimately, I think the bulls will need a micro double bottom. And I want to say one thing about the trader or investors, more or less, long-term investors, traders that are buying 19% pullbacks, they'll be thrilled to buy here's the first target really, and then that'd be the second, by the way. They'd be thrilled to buy at 3,600 as well. So they'll buy a 19% pullback, 20% pullback. They'll buy a 25% pullback, 30% pullback. Betting that even if there's a 60% pullback, if they keep buying on the way down, they're going to do really well. So 5-minute chart. So yesterday we gapped down. We may have gotten a measured move. I want to see one thing. Nah, that's really irrelevant. So the market gapped down below today's lows, and as discussed on the daily chart, the odds were we were going to get a bull day. I thought the odds are we would get a bull day on this day, the 11th, but we didn't. So traders are going to look to buy any sort of gap down and reversal. And if you notice, pretty similar pattern to how we had yesterday. Bar 1, bear bar but big, forcing traders to buy low in a trading range, reversed up. Well, bar 1, even better looking bar, but it's forcing traders to buy gap down after the market's exhausted. So low probability, and the context is bad, so traders will look to buy. reversal bar, but big down, big up, may have to go sideways more. Traders that bought here scalped out when the market went to a new high. Traders sold above this high, and it sold back down. And ultimately, bears that sold this close made money. They sold here, they sold more higher, betting on a trading range, and made money. So, not a great sell. Here, probably an okay buy for a swing, but you got to be willing to hold through it. Otherwise, some traders bought during this bar. A lot of bears would give up. So bears tried here, they tried here again, bad signal bar. A lot of bears would give up, betting that the market's going to test the moving average, possibly the close, and rally on the open. And then when you see this bar, traders just started buying at the market. So consecutive bull bars, bull breakout of it, you can call it a double top. It's another way to call that would be a neckline. So here's the double bottom, here's the breakout of the neckline. Maybe the market will get a measured move. Something like that, and you can see it reached it. So strong breakout, follow through bar, another measured move. Here takes you to the same price. Whenever you can find measured moves that correlate to the same price level, it increases the odds that the market will get there, because you'll have computers that'll see that same price level as a magnet. So, and there's plenty of others we could look for. So bulls are long. They could get out here. It's possible wedge 1, 2, 3, but micro channel probably going to go sideways. A lot of bulls, bulls, if they did get out, they would probably look to buy again above this bar. Here, not a great buy after these two bull bars. Possible trading range open, so could be a trap. And some bulls that bought this close scaled in will maybe look to get out. And you can see here they didn't. Second entry buy though, breakout bar, follow through bar, another big bar. So what you have to notice is it's a little bit climactic. So 1 push up pause, 2 pushes up pause, 3 pushes up. And it's also a wedge. So it's a nested wedge. So 1, 2, we draw it like this, 3 pushes up, 1, 2, 3, and then you can call it a parabolic wedge here. On a smaller time frame, it would be a wedge. First push, pull back, second push, pull back, third push. This tails a pullback. And you have big bear bar, but after this many bull bars, not a great sell, but it is a reasonable sell if you're betting on the low of the day. 3 consecutive bear bars, not quite always in short, but definitely damaging for the bulls, enough to increase the odds that the market's in a trading range, and the market will probably have a second leg down. Wedges usually have 2 legs as a correction. Not a great buy above, so there will be sellers above selling higher, but need a stop up here. And speaking of trades and stops, one thing I do want to comment on is it's very important to be aware of the size of the bars, and nobody wants to talk about it, but I think the unfortunate truth is you need a pretty big account size right now to trade the micros, and you can't take trades risking 6, 7, 8, 9%, and that's a sure recipe for disaster. So I'll leave it with that. If people are feeling emotional, they're trading too large of a position and they're worried about losing. Second entry buy, but micro channel. First up's probably going to fail, and then we sold off. I'm going to kind of zoom up. I got to speed this up just a little bit, but tight enough channel, parabolic wedge, test of the open of the day. It's a possible second leg trap, so a lot of traders would get out of shorts here. Some bulls, aggressive bulls, would buy above this bar, maybe this close, betting on it's a minor reversal, but betting on a deep pullback. Some bulls bought the close, and this isn't exactly accurate, but if they buy this close, buy more above this bar, they were able to get out break even. That happens a lot. This bar did not let traders out, so increased the odds of that happening. Wedge bottom with a double bottom, so it's possible that the market's trying to form a higher low major trend reversal, bear trend, trend line break, higher low major trend reversal. And so far the bulls aren't getting it. Bears breaking below this low, trying to get a measuring gap from here to here, projecting down. testing the low of the day, and they broke below it, pause. And it's possible this is the low of the day. It's parabolic 1. We're going to say 1, 2, 3. 1, 2, 3. Double bottom here. Second leg down, so sell climax. Odds are you're 60% of the time, or you can call it 50-50, doesn't really matter. You get a second leg down, inside bar. You know, traders can buy above it, but this is a pretty tight channel, so if traders are buying, it's a swing, probably going to be a minor reversal, not a great buy. And another leg down, so 3 pushes down, bear breakout below a wedge, which was here, bear breakout, another wedge, consecutive bottoms, another wedge, 1, 2, 3, you know, maybe a wedge, 1, 2, 3. So it's getting reasonable to buy, and traders buying here, the market's probably not going to go that much lower. Big bull bar, but at the moving average, so not the greatest place in the world to buy. A lot of bulls that bought would get out below that bar. Another big bull bar, breakout of a bear flag, so low too short, bulls broke above it. May get a measured move up. And you can see it did here. So possible second leg trap, testing these highs. You know, you can get out below that bar, but probably going to go sideways. Pretty late in the day too, so probably just going to go sideways into the close. And you can see it rallied back above yesterday's low. But more importantly, it closed above the open of the day. And this arguably was a sell climax, or buy climax at the open of the day. So broke above the open, sold off back to the open, sold off again to the open, and then rallied back to the open. And then right here, the market was deciding, it's at the open, do we sell off, close at the low, or do we rally, close near the high? Hope this video helps.